Hello, ladies and gents. Am I live? Let's see. Okay, hello, ladies and gents. Thank you for watching this live streaming on YouTube. Gonna give a few minutes so more people can join. Okay, so this is our 8th day testing the martingale strategy that is usually very risky. It is very important that you know that martingale is usually frowned upon by professional traders. You should try to avoid it, especially if you don't have a very rules-based and very risk management oriented strategy for you to be able to approach the binary options sphere in an educated manner as much as possible using the martingale. So, so this risk disclaimer is very important. Personally, I do not use martingale for trading for binary options. However, we've been testing the strategy for the past 8 days. The first 7 days, we had 4 winning days, 3 losing days, which is somewhat decent enough. So we'll test it today and tomorrow. Tomorrow will be the final day. We will have 9 days of statistical data to show us the consistency and reliability of the martingale strategy we are using. The good thing about it, I've added a few factors to it, a few technical analysis um, confirmations to it to make it a little bit more reliable and consistent. So, that being said, I will be using the tournament to trade the strategy. So my starting balance will be $100. Let me say that $100 is very small for martingale. You can easily liquidate those $100 very quickly. What I suggest is a minimum of 400 to $500 in your accounts to be able to safely trade the strategy that I will be explaining later on. Also, the fact that we have $100 only for the tournament to trade is actually a good thing. Why? Because it will stress test the strategy. So we will put all our rules under heavy pressure for us to see if we can get out of or end the streaming session in profit or in loss. So the first 7 days we had 4 winning days, 3 losing days under heavy pressure, stress testing the strategy, which is quite decent. So without further ado, let me jump into the Excel sheet so I can explain how the strategy works, what does it consist of. So what I did for the strategy is your cycle will consist always of 4 trades. Now, please, if you already watched this thing earlier, just be patient. New people need to also learn, and repetition is always beneficial. So the trade cycle of this martingale strategy consists of 4 trades. This is the first trade amount. This is the second trade amount, the third, and the fourth. Now, if you win your first trade, you have a $1.1 in profit. You stick to your first trade amount. All right. If you lost the first trade, you use the second amount over here. If you win, you have $1.38 in profit, plus you recovered your previous loss over here. If you lose the second trade, you move to your third. If you win, you have $1.58 in profit, plus you recovered the first two trades. If you lose, you go to the fourth stage of the cycle, 14.5. If you win, you have a $3.1 in profit, and you recovered your first three losing trades. Now, for these amounts, for these trading amounts, again, I suggest 400 to $500 in your balance. Why? Because if you lost all four trades, you should stop trading, which will leave you in a $25 loss. In this case, that would consist 5% of your balance, which is not very hard, which is okay. So you stop trading at $25, 5% of your balance. So you can come to your next session, is it the same day or the day after, without the heavy pressure. You will be mentally stable enough. You will not be in a revenge trading mode. So $25 are easily recoverable. So you can come the next day and have a winning session and recover those 5%. All right. So that out of the way, let me show you the enhanced Excel sheet, which is over here. So since we are using Martingale, the goal is to reach $25 per day. So once you reach that goal, so this is your starting balance, $100. These are the trade amounts for that balance in our case today. So once you make $25 or 25% on your balance, you move to your second multiplier. So your trading amounts will increase by 25 in relationship to the first stage amount over here. When you reach your next $25 in profit, which is 150, so now you have $50 in profit, you made 50% ROI, you increase your trade amounts to the following, which is plus 25% of the original amount. So by this stage, you already have added 50% to your initial starting trading amount. So 4.2 is actually, um, so here you have the 1.8 starting balance is actually 50% of the first trade amount over here, which is 1.2. All right. I hope this is clear. You should always have an Excel sheet ready by your side. So whenever you reach your balance threshold, you increase your amounts. This will compound your winnings, will increase your profits a little bit quicker, and will keep your risk management in check since we are increasing the amounts proportionally to your balance range. Okay, I hope this is clear. Now let me move to the charts. Let's set up the charts and show you how the strategy actually works. So let's go over here. First things first, you need to make sure your expiry time is over here. You switch to the clock and you select 1 minute. Okay, we'll be using 1 minute expiry. Then you go to your indicators tab over here and you add, we need only one indicator. You add the zigzag indicator over here to your chart. So let's add it. Default settings, you don't need to change anything. Let me change the color. I like to let me change the color of the zigzag. It's completely up to you. Turquoise and click save. Okay. So now that we have the only technical indicator we'll be using, which is the zigzag, next step is to add as many pairs as you can that have at least 90% payout. Okay, you need at least 90% payout per pair. Anything below 90%, your this strategy will not work. You will end up losing money, even though you'll be doubling. You will end up losing money, even if you win the second, third, and fourth trade. So let's add as many 92% pairs as we can find. Right? Of course, please, if you have any questions along the way, do not hesitate to use the live chat. Oops, these are not 89. So we have all the 90 plus percent pairs in place. So now how do we select the proper currency pair to start our trading cycle? This is very important, my friends. Pair selection is half the job. The other half is the execution of your strategy. So how do we select the proper pair to start trading? You need to see a pair that has a clear and steep increase in price like this, or a clear and steep decrease in price like this. How do we identify this? This is where the zigzag indicator comes in. Notice how the zigzag is clearly showing you the swing low and swing high of the price. And notice how this bar, this zigzag line, is much bigger than those you see before. Okay, so this is a beautiful point to start your martingale strategy, which consists of 4 trades. Now, the second technical indicator factor that you need, which is very important in increasing your win rate. Remember, our goal, we have 4 trades, right, in the cycle. In this case, the first 2 trades are going to be for sell, and the third will be a buy, and the fourth will be a buy. So what we are actually doing is betting on a reversal after an overbought or oversold condition of the market. So why the first 2 trades are sells? This is because we want to see a reversal happening over here. If you lose the first, the second trade is also a sell. If you lose the second, the third and fourth will be a buy trade, because sometimes the market might do a short-term reversal and then keep on pushing up. So these will be your safety net. Good so far? Good. So the second technical analysis that we need in order for us to decide on a pair or not, I need you to find, let's say you see this happening, I need you to find a close by supply zone where the price reached that level and dropped violently. Okay, so if you can't find that kind of a level on a 1 minute chart, go to the 5 minutes chart and look to your left side. Okay, we don't have something clear, so you go to the 15 minutes chart and you look. Okay, so in this case, your next supply area is over here. See that? This is where the price rejected and made a violent push to the downside. So for the pound AUD OTC, it isn't safe already to go in and start your martingale strategy. Why? We need the price to reach the next key supply area above, which is not reached yet. So let's find something that has reached the supply area or demand area. We'll see. So look at this. This is beautiful on the 15 minutes chart. Let me see if we have something close by. No, we don't. Let me see on the 1 hour. Okay, you have a zone over here. You have a supply area over here. You have a second one over here. But this is a major level because the price consolidated a bit. It made a move and it continued the move violently to the downside. Okay, so however, in this case, let me see on the 1 minute. However, in this case, the pair already started making the reversal from this point, so you don't start your martingale. So let's keep on looking for something that has a steep dive. See, this is a potential pair for you. This is a strong demand area. Look at this beautiful push to the upside. So when the price reaches this zone, this is where you should be starting your martingale system. 2 trades to the upside, 2 trades to the downside. Let's find something happening right now. Beautiful. Look at this beautiful drop. Let me see on the 5 minutes. Do we have a demand area nearby? Let me see on the 15. Look at this beauty over here. You see that? This is nice. So you have your demand area. Look at this huge push on the 15 minutes chart from this zone. So this is a valid pair to trade. Let's go back to the 1 minute chart and set up the 4 charts. So you go to this tab over here, you click it once, you click on 4 charts over here. So you already have the 4 pairs on your 4 windows, 4 trading windows. Now you have to set up your trade amounts as per the Excel sheet. So 1.8, it's a 1.2 over here. 1.2, 1.2, 2.8, 6.5, and 14.5 for the fourth trade. Okay, so we are ready to start our martingale. Let me wait for the candle close. That's also for the first 2 charts. I will enable auto scroll. Okay, so now we will begin by trading. Let's wait for the opening of the next candle. I hope this makes sense. Hello, Hamster Combat fans. How are you doing, bro? Let's see. So we'll go for a buy. The opening of the new bar. 3, 2, 1. We go for a buy. So our goal is to reach $25 in profit or 25% in profit, and we stop if we reached our goal. So let's see. Okay. Beautiful. That's a win for sure. So when you win on the first stage, stick to your first trade amount of the cycle. 2, 1. That's a win. Second trade. So it's a buy since the price is reaching a demand area. We go for two buys and two sells in case we had losses over here. Beautiful push. This is gonna be a win. So all the technical analysis that we put in place or the analysis that we have done and the pair selection is half the job. The second half is the execution that we are doing right now. The point is, why do we have to do a little bit of a homework before starting? We do this to avoid, okay, that's a win. We go for a buy. Because the less you reach higher levels from your martingale, so the more you are playing in these two trades, the safer you are. So the initial homework that you do will make sure that you have a high probability not reaching the third and the fourth trade. So this is the ultimate form of martingale trading. So up till now we have how many trades back to back? Let's see. Let's wait for this one first. Okay, 10 seconds. Okay, so this is gonna be a loss. We'll go at the second. No, it's a win. Okay, so let me see here. We already have three back-to-back wins, which is nice. So this is our fourth trade. We already are 2% up. Let's see. Beautiful push. That's it. So now we have our fourth trade, four winning trades back to back. 6 seconds. Beautiful push. I think the reversal is, we take a buy here as well. So up to this point, we have four winning trades back to back. Let's see the fifth. This is gonna be most probably a loss. There's a gap to the upside. So after a green candle, when you have a gap, most probably the price will go down. However, let's wait up till until the end. And we'll go for a buy on our second stage of the martingale, since if this trade lost, it's a loss. We go for a buy over here. So now we increased our trade amount from 1.2 to 2.8 in order for us to recover this loss plus profit. Always keep an eye on the payout. Brokers might change the ROI of the pairs frequently, so make sure you are always on a pair that has at least 90% ROI. Come on, we need a slight push further to the upside. Nope. I think this is going to be a loss, so we'll go for a sell at this level. And here we go. So now we reached the third trade of our martingale cycle. Let's wait and see. I think this is gonna be a loss. So we will switch to the fourth level. 10 seconds. Go for a sell here as well. Remember, buy, sell, sell. We go for a sell here. Come on, I was a bit late. This should be my entry point. Now at this point, if you lose the fourth, stop trading because you already have $25 down. But exceptionally for this live, for educational purposes, I will double up on this one using a buy trade. I will consider that I started a new cycle. Look at the surge. Massive surge. So we'll go for buys. Seconds. Okay. Let's see. We need a decent push up. Beautiful. That's it. Come on. That's it. Keep going. 25 seconds. 13. Come on. Nope. Come on. It's a shame. All right. So I'll go for can go for 3 for a buy. You see how easily can Martingale wipe out your balance? Very easily. So that's why $500 is the minimum required balance for you to safely trade this strategy. So if these are a win, we go back to trading 1.2 at this level. To 1, and we go for a buy. All right. So you see, even though I took triple trades, we didn't recover the previous losses. This is because we had a small starting balance of 100, which is extremely small, I'm telling you. So I can't stress enough the importance of having a decent balance of at least $500. That's gonna be a loss. We'll take a buy over here. Okay, this is going nice. Come on. Okay, this is beautiful. Keep on pushing. And that's a win. So take a buy here. Let's see. Okay, I'll change the pair if I see the sellers kicking in once we win a trade. So I'll go for a buy now. I think this is gonna be a loss. So I'll go for a buy over here. Come on. We are in a bit of a drawdown. Buyers are rejecting, which is okay. Come on. Go for a buy. Beautiful. Keep going. That's it. Hello, Alexers. How are you doing? Let me thank you all who are watching. Thank you so much. Really appreciate your presence. If you have any questions, please use the live chat box. If this is the first time you watch us, subscribe, click the like button, and keep on watching our channel. I test binary options strategies every week. We do a full week of testing, around 9 days. I started last Saturday, so by Sunday, tomorrow, we will have 9 trading days of binary options. We had up to yesterday, we had 4 winning days, 3 losing days. This is the eighth. That's a win. Go for a buy. So the pair already reversed. So let's see. Beautiful rejection. I'll take a buy on the next one. Still have 25 seconds left. We might win this trade eventually. Nope, it's impossible, I think. So we prepare our next entry. 2 1, and we enter over here. Cut this gap down. This thing has to reject and go up. I entered a little bit early on this one. This should be my opening price. So if this one loses, which is this stage, we go for the third with a higher amount to recover the previous losses and make some profit. But we go for a sell on the third. However, come on, that's it, beautiful. Come on. Beautiful push. I'll change pair after this one. Come on. Beautiful. Okay. So let's change. Let's find another pair. Okay. So this is somewhat shaky over here. I will not use it. Nope. Already made the move. Look at this, guys. Supply area. rejection. See? So in this case, you would have at least 3 winning trades back to back. Let me find something else. Beautiful, look at this. Already started. Let me see the 15 minutes chart. See that? Supply area, huge drop. So most probably the behavior will repeat itself. I would prefer this zone. I would have preferred this zone, but this is actually quite decent. So I will go for it. Let me adjust my 4 charts. One minute. Let's adjust the charts. Oops. Okay, I'll wait for the candle close and that's it. We start by going for a sell. So we have a very decent supply area close by. It already started the move. However, on the 15 minutes chart, we can see a steep decrease in price from the supply area. So we still have some time to milk this thing. Again, we are a bit in a drawdown. So our goal is to reach $25 or 25% in profit. We start with $100 balance. Come on. This is gonna be a win. Hopefully. 3, 2, 1. That's a win. We go for a sell as well. So look at this. If we came a little bit early, 1, 2, 3, 4 trades back to back winning. Let's see what's gonna happen here. I think this is gonna be a loss. So we switch to the second amount, also for a sell. If we lose it, we might not lose it. Come on, beautiful. Come on, keep going. Nice push. Beautiful drop. 2, 1, and here we go. Our next sell. We are still in a drawdown. See this massive increase in price. Nothing can go up and up and up until eternity. It will reach a point and reverse. The reversal might be short term or even a long term reversal, which, if it happens, it will be your lucky day. We might still win this one. Let's see. Beautiful. Come on. Slight increase. That's it. Come on. Okay, we'll have a loss. So we go for a sell as well. This was very close. Let me see how many points. 8 points. Nothing. See how the sellers are rejecting. You have topping tail bars all over the place. So I I expect, nothing is 100% sure. I expect a huge seller stepping in. How do you know? You will see a strong engulfing bearish bar, beautiful job. Beautiful, amazing. That's it. Keep going. Nope. Come on. That's a win. Go for a sell as well. It's a bit of a late entry. I needed to make sure that I had a win. So we are recovering slowly our drawdown. Okay, this is a common rejection point over here. So we might see a rejection from this point. Look at this, beautiful, rejected. Struggling to breach, beautiful, that's it. Oh, hold on, that's it. Okay, take a sell as well. We stick to the strategy. So we took a sell. Since we lost the first step with this amount, you go for a sell with the higher amount. Now, if we lose this one, we go for a buy, third trading amount of the cycle. If this one loses, we go also for a buy over here. If it wins, we go back to selling. This is gonna be a loss, most probably. So we'll take a buy to one. I'll take a buy here. So now we are trading at the third stage of the cycle. So since we have some decent momentum from the buyers, I think this is gonna win. And I will change pair. I will change the pair since look, the reversal seems to be short-lived, short-term reversal as the buyers are stepping in powerfully. So we change the pair or we wait. You can option two, you can wait for the price to reach this point again and see how the market will react and start your cycle again for a reversal. So this could be a retest. It will be the third retest of this area. You have 50-50 chance for it to breach and keep going up or reversing back down. So I'll stop here. I'll stop for this pair. So now we recovered our balance. We are no longer in a drawdown. So let's keep on trading until we reach the $25 profit or 25%. I will change the pair. So let's see if we have something else. Let me add a few more 90%, 92% payout pairs. 92 pairs. If you have any questions, please do not hesitate to use the live chat box. Okay, you have a lot. Beautiful. So let me check and see something that is beautiful. Look at this. Fantastic. Let me see on the 5 minutes. It's already consolidating for a reversal. Okay, so you have a zone here. You have a zone over here. See this movement? The buyers stepped in, made all this move. Your second best zone is over here, which is already happening. So this is beautiful. I will wait. Let me set an alarm. I will wait for it. You have to be patient, guys. Patience is key. Let me mark this area over here with an alarm. Go back to the 1 minute chart. Beautiful. Look at this. Very powerful. Steep dive. It's impossible for it to keep on going to the downside. It has to stop and reverse. So let me set up the 4 charts. USD Brazilian currency. Let me go here and set the charts for the appropriate pair. Usually, my advice to you, avoid trading the OTC during weekends. During weekdays, OTC already is quite shaky, let alone weekends. However, since we are stress testing the strategy, this is an additional level of stress, so we are sure of what's going on. So the zone is very close by. Your best option, best zone possible. The reversal might start anywhere close by, okay? So remember the line, the demand line that you draw over here, hold shift to draw, okay. The the line that you draw over here is not set in stone, it's a zone. So it's an area, so to speak. So let me see. I will wait a little bit more for this thing. It's already slowing down. When you start seeing wicks like that, this is a reversal doji. So if this thing fails to break the doji to the downside, I will step right in for buys. Order placement should be prior to 1 second before the candle closing if you get to know using the trade for the right entry. Order placement should be prior to one. I'm reading, for those watching on YouTube, I'm reading a comment on live chat. Oof, I missed this one. I'll go for a buy, no problem. Order placement should be prior to 1 second before the candle closing if you get to know we are losing the trade for the right entry. Okay, got your point, Sarwar. It's a double-sided sword. Why? Because sometimes the opening of the next candle might gap up or down. It's a double-sided sword. Now let me give you a hint. If you are losing violently, let's say I'm going for a buy in this case. I'm going for a buy in this case, and I know my second trade is for a buy. If I see a violent green bar going up, I might enter 1 or 2 seconds before because the momentum is very powerful. You see my point? However, if it's slow and moving, up and down, preferably, let me go for a buy here as well. Preferably, wait for the opening. Oops, we won the first one. No problem. It's okay. We actually won the first trade. But I get your point. I get your point. If I see this one going violently up, I will enter 2 or 3 seconds before, especially if I see it, violent. So I might get a safety margin. I get your point. Logical, but it's risky. It's a double-sided sword. You should be able to identify when to do those moves. Like in this case, if it keeps on going violent like this, I'll enter even 2 seconds before. It's very violent. I go for it. See, so now look at this. I have a safety margin. Instead of going in right here, I have a few points of safety margin since this was extremely violent to the upside. So when you see violence, you can go for it 1 second or 2 seconds before. If not, don't do it because usually you will see gap up or down at the opening of the next candle. It will either be to your benefit or to your um, demise, so to speak. So it's a double-sided sword. You should be careful on it. Beautiful push. See, so since this one is rejecting, I will wait for a close. I will wait for the close. 2, 1, and here it is. Okay. So now after being in drawdown, we are back in profit. 3.6%. You see how the sellers became weak and weak and weaker, and now the buyers are stepping in. Beautiful. Look at this. Beautiful. Come on. Come on. 2 seconds. And here we go. You see the gap in this position? You see the opening? It opened, it gapped down. So the fact that I opened it at the opening of the new candle gave me a safety net, like a few points of safety margin. However, if I entered the trade 1 second, it would be over here. So I would have lost a few points at the opening. Look at the surge, beautiful. The reversal over here is fantastic. Margin of safety, exactly. See, this one is beautiful pressure. I will take it right now. We have a win. So how many back-to-back wins do we have? 1, 2, 3, 4, 5, 6 back-to-back winning trades. Nope, actually 5. Beautiful. And the sixth trade is on its way, hopefully. 25 seconds left. No, come on. No problem. We'll go for the 2.8. So now, I went in too early. No problem. A bit fast. That's very nice if we are doing compounding. Exactly, exactly. But in my opinion, I think compounding should be related to a balance threshold. Okay. Now, if you see such violent movement, you might increase a little bit over here. This is we can test this for the next week, for example. So if we see compounding, we will do 1.3, 1.2 here, 1.4, 1.6, and 1.8. And once we reach, let's say, 4 or 5 back-to-back wins, we can stop. That's also an option. You can, work with it as you like. That's going to be a loss. We'll go for a sell. But you cannot guarantee, you can never guarantee that you will have those 5 back-to-back wins all the time. And this is why we look for powerful demand zones close by to have the highest probability of back-to-back wins. So now we went for a sell. We took 2 buys, it lost. So the third step is for a sell. Absolutely, yes, yes. Come on. Beautiful, come on. We need a little bit more to secure it. Nope, come on. That's it. And we go back for a buy. Okay, so now we are 4.6% up. So this is a small retracement probably happening over here. And it will shoot back up, I think. If we see a green candle bar clearing all those sellers over here, that's a huge indication that we have buyer's momentum. Let's see. Beautiful push. Come on, a little bit more. That's it. That's a win. Come on, the payout dropped. Come on. See this, guys? 49 and 43%. Shame on you, pocket option. Shame on you. Let's change the pair. That's a shame. Come on. Let's change the pair. Look for something with a 90. You should always keep your eyes on the payout. It can make or break your balance. However, we are still in profit, which is nice. Let me see something else. This is beautiful. Let me see the 5 minutes. Okay, we have something here. See that? It's already rejecting. However, we have lots of bottoming tail bars. Buyer's pressure. So I will not proceed with this one. Look at this, guys. That's a pro tip for you. See all those 5 minutes bars at this supposedly supply area. Lots of pressure from the buyers. So the buyers are still here on the 5 minutes. So I will not use this pair. Look at this beauty. Look at this beauty over here. Very powerful. Supply area. Look at this drop. Fantastic. We missed it. No problem. Nope. This is beautiful. Come on, look at this. It's hovering. This is your supply area. Second best. First best supply area. However, it's rejecting from this zone. So let's go for it. 92% payout. Go to the 4 charts. Let's adjust accordingly. Okay, I will wait for the opening of beautiful. Look at the surge. So actually the reversal is happening right now. This was all consolidation. You see an engulfing bar wiping out 5 to 10 bars to its left side. So the sellers are stepping in big time. I'll take a sell here. So you see that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 bars, actually 14 bars from here got wiped out by this engulfing bearish bar. So we entered at the best point possible to start the cycle. Beautiful. Keep going. Nice. Very nice. Beautiful. Beautiful. That's it. Let me mark this rejection area around there. So we know when beautiful, we go for sell. I need to see where the buyers could step in. Okay. So this could be when the price reaches over here. This could be your signal to stop trading on this pair. I was a bit late on this one. It should have been over here. I was talking to you guys, so it's you to blame. Beautiful. Come on. Beautiful. Lovely. Okay. 5 seconds left. 3, 2, 1. Go for a sell. So we're up 7.4%. For those of you who just logged into our live, we've been in a drawdown. Actually, I've been around, the balance dropped critically low. It went all the way to $6. And we went all back up to 1.7. So why I didn't stop when I reached the $25 loss? Because I want to show you how things can go if you break your rules. So I broke the $25 rule. My balance kept on dropping up to 6, down to 6. However, we got back up. Beautiful. Go for a sell. So at this point over here, if the price reaches this area quickly, you should consider changing the asset you are trading because the buyers might step in. Okay, so we'll be having, I think, a loss on this one. So you see, we had four, one trade, second trade, third, and fourth. Actually, three. I entered over here. This was my first trade on this one. So we had three trades winning back to back. So we'll go for a sell here as well. Okay. Come on. I think this is going to be a loss. We go with the buyers on the third trade. Come on, we might win actually. No. So I'll go for a buy here. So now we lost the first, we lost the second. Go for buys in this case with this amount. Third step of your cycle, of your martingale cycle. 30 seconds left. Nice. We need a slight, decent push and we secure it. Come on, baby. That's it. Come on. A little bit more. Come on. This is gonna be tight. It's a win, most probably. Go back to selling. 3, 2, 1. That's it. Go back to taking sells. So now we're back to 10% win. Now, let me give you a tip as well. When you are when you find yourself trading more than an hour, especially if you have been in a drawdown and went back up to 10% in profit, you should stop. Even though your goal is $25, you should stop in this case. You need to relax your eyes. You need to go freshen up and come back with a fresh mindset, fresh eyes again. I'll keep on trading, nevertheless. Okay, beautiful. So we'll take a sell over here. So the time you spend on the charts is also a critical factor. It can mess up your mindset. So stick to 30 to 1 hour trading, no more than that, to avoid over trading and to avoid overconfidence. You might reach, your profit target very quickly and say, okay, I'll keep on trading. Don't don't do that. Stop trading, go back, go out with your wife, kids, do something else. Beautiful rejection from the sellers. Keep going. Come on. That's it. Beautiful. That's it. That's my baby. Take a sell here as well. Okay. So you see here we have a resistance area. See this resistance area? This is why we are seeing rejection over here. So we go for a buy, for a sell. Next step, if we lose, if it pushes up again, I will take it a bit early. That's it. I'll take it to the safety margin in this case. Not that much of a safety margin actually. Exactly on point. So now I'll go for a buy. If it wins, I will stop trading on this pair and move to select something else. Beautiful. Okay, go for a buy. Let me prepare the buy over here. All right, I'll take it here. See, in this case, since you have a violent bullish bar, we had the safety margin instead of this gap up. Instead of having your entry point over here, we got it over here. It has to reject. It has to reject at some point. Push back up. This is a huge gap. I'll go for a buy on my fourth step. Okay, I'll take a buy here. So now we are trading over here. If it loses, I'll take double this amount, however, with a buy, with a sell, excuse me. So you get back to your first step of the cycle. Beautiful. We need more. Beautiful. Beautiful. That's it. Come on, keep going. Come on. Come on. That's a shame. So we'll have to take two sell positions at the close. Here we go. Two sell positions. Beautiful. It has momentum. Keep going. 25 seconds left. No, come on. Come on. 15 seconds. It's gonna be a win. Beautiful. Beautiful. That's it. That's my baby. Okay, guys, look at this. We are 15%, 15.5% up. We've been trading for more than an hour. Stop right there. Don't be a machine. Okay, we didn't reach the $25 or the 25%. However, we made 15.5%, which is very decent. Okay, so let's stop right here. I'll give you the floor if you have any questions regarding this strategy or something else. So I'll give you a couple of minutes if you have any questions. Let me see how much time did we spend trading. Approximately 11:20. So we traded around 48, excuse me, 52 minutes. So that's enough. That's more than enough. So I'll give you a couple of minutes if you have questions. Sarwar, if you are still here, you asked me something the other day in private. I told you, what was your question? It was something about OTC, but I forgot what it was. Trading in 2-3 sessions, making exactly 15-20% in session is excellent. Exactly. As long as you are taking long breaks, like 2-3 hours breaks between each session, is perfect. And even if you lose one out of 3 sessions, you will still be within your risk management procedure. So this is actually a good idea. However, my suggestion is try to perfect a different strategy that doesn't involve martingale, something technical analysis based, or technical analysis based. So you can do one session of technical analysis, one session of martingale, or 2 sessions of martingale out of the 3. This way, you will not be putting all your eggs in one basket. You will have a diversification of strategies. My VIPs know this well. I always change my strategy depending on what the market is giving me. So 2 months ago, I was trading 3 minutes trades with my VIPs. I switched to 5 minute. I started with 5 minute trades. I used to trade breakout trades. When I saw that the market is not giving me what I want from the breakout trades, I switched to a 3 minute trading strategy. And then I switched to a 15 minutes trading strategy. And now I'm using a 6 minutes trading strategy. So you have to perfect two or three non-martingale trading strategy in your arsenal so you can adapt to what the market is showing you and have different tools for you to attack the market. Great. So martingale is should be one of those, not the only thing, because as you can see, you know for yourself, Sarwar, you can increase your balance exponentially in martingale, and you can lose all of it in a blink of an eye. OTC erratic behavior, exactly. Let me show you this. Let me remove the zigzag. So your question was that OTC does not respect the zones and the technical analysis um, procedure. Now, I disagree to a certain level. Like, look at this demand area over here, and look how it rejected perfectly and shooted up as well. And look at this rejection from this demand area over here, and it reversed back up. So the OTC pairs actually do respect the zones. However, I'll show you something. Let me open trading view. So I explain. So I'll give you a clear understanding of the point I'm trying to explain. So look at this. Let's say the Euro Japanese. All right. So usually I put on my chart, always I do 200 moving average and 20 simple moving average. These are my two friends. I don't consider a chart without those two actually. So for Euro Japanese, you can see if we go to the daily chart, let me go to the daily chart. So this is your daily chart. So look at this. You can see on the daily chart that the Euro Japanese yen spent around, what's this? This is from April up until July. So April, June, July. So 3 months in an uptrend, in a clear uptrend. All right. Is this easy so far? Because my 200 moving average is my way of seeing where is the general movement of the pair. So the general movement for from April till July was to the upside. So for binary options, so if you are trading on smaller time frames, let's say the 3 minutes chart. Let's go back to the 3 minutes chart, for example. So from April till July, look at this. From April, let me go to, you see this upwards momentum, clear upwards momentum happening over here. Look at this. The pair is clearly going in an uptrend, right? So it's going above the 200, below the 200, way above the 200, and even the 200 is in a steep, around 45-degree slope to the upside. So these are the live market pairs. Usually you will see distinct and clear trends on the daily chart. The daily chart should be like your compass, so to speak, your baseline to know where is this thing going. Let me go back to the daily chart. So you see that April, let me go back to April. So look, so this is April to July. Beautiful. Look at this push. So let me show you the situation on OTC pairs, which is completely different. Let me switch to the daily chart and remove the auto scroll for now. So look at the daily chart. Let me install the 200 moving average, simple moving average. Okay, so look at this. This is your 200 simple moving average on the daily chart. Look how the pair doesn't have a clear trend. It's consolidating on the daily chart. Now, look at this as well. Let me show you something here from the back. You see? Do you see the daily movement? There's no clear trend. Now, this is bullshit. Look at this on OTC. This is complete bullshit. Let me find something else. Look at this. This is the perfect example. So, this is your 200 moving average from July till today. July till from September, excuse me, from September, so around 4 months. The pair is moving in a sideways situation, going a little bit below the 200, a little bit above, a little bit below, a little bit above. So what does this mean? Let me show you more examples. It's all over the place. Look at this. Look at this. You see? So this is from August. The pair doesn't have a clear direction, up or down. It moves at the vicinity of the 200. So it's in a sideways situation all the time. Let me show you something else. Look at this as well. From August, sideways situation, up in the vicinity of the 200. There's no clear upwards momentum or downwards momentum. There's no clear trend happening. Let me show you more. Look at this, same situation. Look at this from August. Sideways situation, no clear trend. Let me show you even more. Look at this as well. From August, sideways situation. There's no clear trend. So that's why OTC market, I'm not saying that there's manipulation happening. This isn't the point. The point is that the way the OTC pairs move are completely different from the live market pairs. So whenever you think you are in a clear uptrend or a downtrend, actually you are still in a sideways situation. Now this could be a blessing or a curse. I could look at this. I could easily wait for the price to come back on the daily chart over here and place a 4 hours trade to the downside, for example. However, when you go to the smaller time frame, let me show you this. When you go to smaller time frames, so even though you are saying that the pair is on a downtrend below the 200, on the daily chart, it's always in a consolidation situation. So this is why at some point you could see the pair doing this and then suddenly pull back to the upside. A quick sudden move. This is why the martingale, this is why I use the zigzag. I use this baby over here to show me those steep downward momentums, because I know for a fact that on the higher time frame, on the D1, the pair is not allowed to go in a certain direction, in a clear certain direction for a long period of time. I know for a fact that the pair on a higher time frame is in a consolidation situation. I know this 100%. Trust me, I checked all the pairs for a long period of time. It's always like that on the higher time frame. So I hope I cleared this point. Um, the OTC moves in a different way. It's always consolidating. Keep this in mind. On the higher time frame, you'll always see this happening in a relationship to your 200. You are a core technical chartist. However, we lack patience in trading on charts and OTC markets. Read your explanation. Exactly. This is why, look, binary options. If you are a new trader and you start trading binary options, it's like when you are a new driver and you are learning how to drive on a Ferrari or a Lamborghini, while you should start learning how to drive on a Corolla or on a Kia, let's say Cerato, or on a Honda Civic, for example. The forex market is your Honda Civic. It's your Toyota Corolla because it's way easier than binary options. Unlike everyone thinks that binary options is easier because you can click the buy, click a sell button, and set your expiry time. At the face of it, it looks easier. However, it's the Lamborghini of trading. It's the Lamborghini of trading. You should learn how to trade on forex first or stocks, and once you reach a level of unconscious competence in forex, you should switch back to binary options. So that's why I always say this: the percentage of losing traders on binary options is very close to 95%. So everyone who deposits within the first week, they will see themselves liquidated like magic, and they will start blaming the broker. They will start saying it's manipulation, it's all that stuff. No, it isn't. The OTC market moves differently. It moves in a different situation. So that's it. If you have any more questions, since we are spending some time together, I like the fact that I'm talking a lot. So if you have any more questions, feel free. I'll give you a couple of minutes. If not, let's wrap this up. Okay, okay, Sarwar. Thank you so much for being here. All of you who watched the live, and Sarwar. Hope you got something out of this session. Thank you for watching and see you tomorrow at the same time. Tomorrow we will have the verdict. Now, let me put this here. Up to this point, we have 5 winning days, 3 losing days for the martingale. Tomorrow will be the final testing day of this specific martingale strategy. I hope we will have a 6 winning day because at this point I will start trading it myself with my VIPs when I start copy trading only because martingale signals for manual execution for my followers will not be something doable. So tomorrow will be the final testing day, 9 days in a row testing this strategy. Thank you for being here and see you tomorrow for the verdict day of the martingale strategy. Bye bye.